sets, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Like the adrenaline. Well, today, a little bit different show. We're going to do some live trading and market analysis as per usual. But today is now Big Money Monday. And what's cool about Big Money Monday, it's something new we're going to try here. And essentially what I want to do here is highlight positions that you may want to consider for your own personal portfolio, more of a longer term. So we're looking at investments and swings. So a lot of people have a focus on short-term trading. I want to bring your focus to a little bit longer term and look at some opportunities like we'd like to talk about on the show quite a bit. And that's how I personally believe you build a lot of wealth. So that's what Big Money Mondays are always going to be about. And anything that I personally talk about on a Big Money Monday, I will follow up in the future as well. So if I bring up a position on here, and if I say if I'm already long a position or I open a position even live on the program, we'll keep eyes on it too. So you know exactly where my head is at all the time. So I'll have a little segment going forward on this Big Money Monday program, segment, whatever you want to call it. But that's the theme of the show today. So we'll do what we normally do here in the morning anyway. We'll look and see if there are opportunities in the market in general for any day trades or anything like that. We'll look at some catalysts for the week, but then we're going to dig into some big money things. Now, something I brought to your guys' attention, and I want to highlight it real quick before we get into it, and we'll talk about it a little bit later, is Kronos Group. We talked about this 2-3 weeks ago, and I think I even made a video on it. I'm not sure if I uploaded it or not, but I mentioned that this is a good, solid, long-term investment, especially if you want exposure in the marijuana segment. This is a company, already has distribution, barely has any debt, solid company in my opinion. We had some news overnight in regards to Trump looking to basically ease or declassify how marijuana is seen right now. Obviously, all those stocks are going to get a bump off of that because one of the major catalysts I said long term for a company like this is obviously if it becomes decriminalized or at least I guess decriminalized and taxed, obviously would be great for the economy. But if it becomes decriminalized, it opens up a whole market legally, federally, across the whole United States. And this is a company I believe will take advantage of that. I mentioned that I have been, was, still am very long, basically in this big old base range down here. I think I have an average of like $1.50, $1.70, somewhere in there. And I've been building along for basically I've been long all the way back here too. I've just been adding and adding basically since COVID. I've been adding and adding this name because it gets better and better and better, in my opinion. This is a great company I want to keep an eye on. When I brought it to you guys in the program, I think it was sitting just shy of $2. Now trading in the pre-market $2.60. So this is a solid stock still. You're going to want to watch this 200 MA on the weekly. We'll talk about that later. But just want to give a quick update on CRON. If you are someone who has been watching the program, you know that is a company I'm very big on. And that's one of these names I want to highlight here on Big Money Monday. These long opportunities where if you're patient, they will pay off. A lot of us can make money day trading the market, swing trading the market, but you want to know where to put all this newfound money, right? You made all this money in the market. Yes, you could keep shoveling it into day trades and swing trades, but don't you want to have some longer term wealth that you can build? Something to cushion the volatility of the market, something like that. Look for those longer term opportunities when you could chill on a stock. Imagine like Krone eventually goes to $20 like it did in the past, and you bought a wealth of shares at $2. You could sell calls at 20 and you won't even feel it and make free money. That's how I like to think. So hopefully you guys appreciate that. Now, let's take a look at our catalysts for the week. Let's see what we got coming down the pike. Today, it looks like a boring day. We do have Trump. This was just added. This wasn't here this morning. Apparently having a press conference today at 10 o'clock on crime. So maybe watch like your, what is it, Axos? AXOS, right? I think that's the cop cam. No, it's AX something. AXON. Maybe keep an eye on them. This is like the people who make the police cameras, I believe, right? I'm like 99% sure. Pretty sure they make the body cameras for police officers and other things like that. All their self-defense kind of stuff, law enforcement equipment. Keep an eye on this company. If you're long this company, it's a big company also, by the way, $66 billion company. I don't hate this company either. Just saying you want to keep an eye on this one. With that press conference here, if you have exposure to an adjacent industry, defense probably, you want to keep an eye on that conference today at 10. Outside of that, we don't really have too much coming down the pike today. Looking forward to tomorrow. We have CPI. What else we got? 2 Fed speakers. Barkin tomorrow at 10 o'clock. We also have 10:30. Outside of that, pretty slow day tomorrow. Looking forward to Wednesday. Barkin again on Wednesday. You got Goolsby on Wednesday. You do Bank of Canada meeting minutes. Probably won't do anything there. So you got 3 Fed speakers on Wednesday. Okay, over to Thursday. Not much on Thursday except jobless claims and PPI. So you'll get a bump there either which way. Man, Barkin's talking a lot this week. Barkin 3 times this week. Again on Thursday. And Friday, Trump is meeting with Putin apparently. So watch that or any adjacent things like Russia, ETF, stuff like that if you have exposure. And my favorite, Michigan sentiment, as well as OPEX. So we are in OPEX week, so be very mindful of that. Volatility will be high, especially on your weekly contracts. All right, let's take a peek at the market and see what we got going on for the day today. So actually, let's zoom out to the daily here, zoom in, and we'll get rid of my doodles so you guys can see a little clearer. All right, so we had those 2 down days, or a few down days in a row. We had a short little grind up here. Volume's a little iffy. It's not awful, and it looks worse than it is, mainly due to the fact that when we came down on higher volume. So that does distort the image a little bit, but if you just look, even if you just put your crosshairs here like you'd see on my chart, volume's okay. It's not awful for this little grind back up, but it's not on higher volume. So that's something not necessarily to be concerned about, but at least be conscientious of. We do have the daily SAR here, and you guys know how much I love my SAR indicator. That daily SAR is sitting at 638.51. Now, I am still in the camp that we need a deeper pullback prior to getting another leg up. With that being said, I could be wrong. I will be okay being wrong, and that's kind of part of trading the market is when you're wrong, admit you're wrong and change your strategy, change what you're looking at. And it's possible I am wrong in this scenario because the weekly, although a bit over extended here, could go again. And the monthly still, I eventually, again, as I explained on the show, we more than likely need to back test that original SAR break, but so far we haven't done that just yet. And this monthly candle so far is actually shaping up to be a bit better than it was originally looking. So I would be very neutral this market right now, especially this week. I wouldn't be too over leveraged bullish or bearish right now, just because we're sitting at a pivotal point where obviously people are going to want to short the market at all-time highs, just because it's kind of an obvious thing to, if you're going to take a stab, you take a stab there. But you also have this daily SAR break that could happen with a MACD flip, and bulls are still holding momentum with a 62 RSI. So it's iffy. Now, keep in mind, we have NVIDIA earnings coming up on the 27th. I, again, am still in the camp that we need to pull back a bit more, but we did kind of clear that pullback with this candle here, and it's been grinding a bit higher. Currently at 182 in the pre-market, roughly. Again, I'm not someone saying short NVIDIA necessarily, but I do want to bring something to your guys' attention. Keep in mind, the SPX SPY, whatever you want to call it, the general market, the weight of... I'm sorry, I shouldn't say the general market. Let me correct myself to be very literal. The weight of the S&P 500, the weight of the SPX is really held, 35% of it is just your Mag 7, right? We talked about Meta on this program and how it's a little shaky here. Now, you backtest the EMA. If we get some volatility here, it's got to clear over like 775, 777 even before we get some momentum to the upside where it looks like it could get a continuation here. Talked about Microsoft not showing a lot of strength here, and it still is not showing a lot of strength. I would reevaluate when the gap fills, see what happens. But that looks like it's written in the cards here. Google, let me turn my doodles back on. Google is looking okay because we broke that 197. So again, this was my barometer for looking at how tech may perform in the market. And I said if you break 197 on Google, that would be a better sign for the market looking more bullish near term. So this is like your most bullish Mag 7, at least in my opinion. With the exception of Apple, who had a crazy move here. Some sort of leveling out here has to happen. However, with that being said, it's a crazy candle in the week too. It has drawn down and kind of built some level of a base. If you zoom out here on the daily, we're just kind of farting around. So getting some level of a breakout here isn't really too crazy to think about. And you have it on higher volume. So maybe a lower volume back test of this 224 or the 200 MAs where I'd look to reevaluate again. I wouldn't chase it, but I would look to reevaluate again in this area and see how things balance out with Apple specifically. Tesla's getting super, super tight. And again, this one could go either way. So I'd be very cautious here, either which way. You're making lower highs, essentially. You're making higher lows. So it's going to break one way or the other. Really what I want to highlight here in general, what I'm saying, and Amazon's kind of questionable. Bezos keeps selling. We're sitting around 220 pretty evenly. It's bullish as long as it's north of 210. What I'm trying to highlight here before the market opens and before we get into NVIDIA earnings next week, I believe, right? 27th is, no, 2 weeks from now, is that many of these Mag 7 names are questionable territory. There's a bull case and a bear case. And a lot of times you could look at things both ways like that. And I'm not trying to foo-roo you guys, but there is an argument both ways here where I could see it going either way. It's not clearly bullish or clearly bearish. It is neutral where it could really go either way on a lot of these names. And that's the kind of environment you want to be very careful with, especially when you have basically two bigger catalysts. You have OPEX and you have NVIDIA earnings, which NVIDIA earnings may not sound like a massive catalyst, but that is your canary in the coal mine for tech, for growth, for AI. So how they report and what they do is going to weigh on the market. Not to mention, if they continue to grind up into earnings, you got to think of it this way, expectations are going to be even higher. So we're already expecting huge growth out of this company in general, because that's how it sustains this high evaluation. If it continues to grind higher and higher into earnings, the expectation at that point is going to be even more tremendous. You got to keep in mind, this is a $4 trillion, $5 trillion company, however much it is. And as it moves up, every dollar, I don't know how much it is. Someone can tell me in the chat if you want to figure it out, but every dollar is a massive amount of money. So getting higher and higher and higher puts it into an even steeper evaluation before earnings. All right, guys, we got a few seconds here until the market opens. I'm going to ask you twice. I normally ask you once now and once later in the stream. Do me a favor if you're watching with your 2 eyes, your 2 ears, wherever you are in the entire world. Do me a favor, like the stream, help support it, drop a comment, say hi in the chat. Good morning, Negum. I see you in the chat. Thanks for saying hey. Follow me wherever you are. I appreciate your support. Thanks for watching with me this morning. I hope you guys learned something here and you can take away something valuable from our show. And don't forget, once we get over to 500 subscribers over on YouTube, this will be an everyday show. So if you like the idea of that, do me a favor and go on, pop over to YouTube and drop a subscription. It's free. Or tell your friends. All right, market's opening. We're pretty flat here in the open. SPY's opening around the 637.58 area, currently under it. And keep in mind, we're near that all-time high. We're near that daily SAR, so there should be some level of resistance here in some degree. It's also a Monday morning and a Monday morning before OPEX. So in general, on Monday mornings, I tend to slow and hit the brakes more than I would on a normal morning. Here's why. Remember, the market is open every single day during the week. There's less time and less information the market has to digest, right, overnight. Something can happen, of course, but when you go from a Friday to a Monday, there's more time, there's more information, there's more people are going to feel a certain way about things before the market opens on Monday, and they're going to make their decisions, right? So Monday mornings, I tend to, me personally, you'll see higher IV, or I see higher IV if you're looking at 0DT options in comparison to like a normal, quote, quote, normal day. But you'll see typically wider price action on a Monday morning. So if you're seeing higher IV and wider price action, that doesn't really give you a lot of confidence, whether you're bullish or bearish, it doesn't matter. It doesn't give you a lot of confidence in either direction. So that's why I like to wait out. Typically, if I'm playing the SPY, and I keep saying the word typically because that is 9 times out of 10 what I do. If there's a rare opportunity to take it. But you want to wait out Monday mornings a lot of the time. Let volatility cool out. Let the market digest whatever news happened over the weekend. Let things cool off and go from there. But what you can do is prepare in the meanwhile. We can look at the market. We can look at our sectors. We see what's going on and start to build a game plan. I call this fishing in our Discord over at Exclusive Trading, where, and you see me do it on this program before, I'll say, if this, then this. If we tap this level, I go long. If we tap this level, I go short. And we may be nowhere near it. But that's the point where the risk to reward makes a lot of sense. So that's what I like to do, especially on a Monday. If we can fish, we will fish. But right now, we're pretty flat. We're tapping the red to green area. The Q is moving down a little bit. Conversely, you're seeing early signs of divergence again between the Qs and IWM. Now, IWM is still below our tattoo level. Remember, you've got it tattooed on your buy. That's why I say 223.32. That is the most important level in the IWM in the interim. Over that, you're bullish. Under that, you're bearish. Now, I will say, IWM has been consolidating here as we zoom in. This is a crazy candle here in the middle, but the last 5 trading days, including today, we basically be sitting pretty flat on this 220-ish area. Your MACD starting to curl here. Momentum has been sustained by the bulls. As I like to say, I don't look at RSI as overbought, oversold. I look at it as a momentum indicator. Over 54 is kind of like my magic number. If it's over 54, I like to say that things lean more bullish. Under that, it's questionable to neutral, and then obviously if you get to like 30s or bearish. So if we're over 54, which are almost there on the daily, that tends to give me an idea that this could be an early sign of bulls holding momentum as they're sustaining this general price area, or this price level, I should say, with MACD curling over. So there's could be the early signs of a flip here, getting back to that tattoo level, but I don't want to front run it either. Remember, it's OPEX week, so you're going to see a lot of volatility. Things can look really good and just get shut down very quickly, so keep that in the back of your head. VIX right now near 16. Remember that 1775 still valid until this Friday when OPEX is over, I should say. VVIX up at 95 as well, so the volatility is a little bit higher when we open with a higher VIX, so we could see some reversion there with volatility. UVXY currently moving to the upside at the open here. NVIDIA shooting down at the open. We talked about Meta already. I mean, we talked about all of these, but so far looking at our big tech, moving to the downside so far in the early moments of the market. Ooh, all right, hello Tesla. Tesla said nope, and moved quickly over my 339.20 LOI. Good morning, Tom. Thanks for saying what's up in the chat. Let me check on... Okay, let's check on our sectors here real quick. Let's see where there's some strength, some weakness, etc. All right, guys, in the chat, if you know what I'm about to say, I'm looking at these 4 tickers up here. What does this look like to me? Who watches this program? I know Tom and Negum, you guys are here a lot of the times when I'm live. Anyone else? If I have a green XLU, if I have a green XLE, if I have a green XLP, and a red XOK, and I group them up here to make it super easy for you guys when you watch along, do you know what this means? Or I should say, do you know what this could be indicative of? Because we're still in the early mornings. It's Monday, so early signs of what this could mean, especially with the green VIX. Do we know? I'll give you guys a second because I know the stream's on a lag, so let me know in the chat if you know what this could be indicative of. Meanwhile, I'm going to go over the other sectors and we'll circle back to that. Right now, real estate is sitting pretty flat on the day. Materials up a little bit, got a little bump at the open, coming down now. Looks like you might have the start of a bullish trend on the day here for XLB. Industrials flat. Healthcare, nice move on healthcare here, up 0.75%. Look for this to carry some strength. If I remember correctly, yeah, it's been in a bit of a downtrend here, but it's looking like we might get a little bit of a mean reversion here on healthcare. It's got to happen sooner than later, though. Otherwise, ooh, look at this. Healthcare, so your XLV is sitting in a very interesting spot. You're right above the POC, basically a double bottom off the POC. You're getting real tight here with the 50 MA on the monthly. You're under the 200 on the weekly. This is interesting. This could be the start of a bigger downtrend in healthcare if not reversed out of... And remember, these ETFs move very slowly. I would give it 2 to 3 weeks and keep an eye on this. So basically give it the monthly candle of August, because it's essentially 3 weeks. So watch your XLV for the next 3 weeks. Keep an eye on that. It's a little shaky. Financials looking pretty good on the day so far, up 0.3%, looking like we're going to try to push to the upside here. Consumer discretionary, we saw Tesla made a nice move at the open here, and that's indicative of how the XLY is performing at this moment. And comm services also looking pretty solid. Negum guessed high volatility. That is not necessarily correct. Anyone else have a guess of what XLU, XLE, and XLP being green with a red XLK, again, could be indicative of? It's still early morning. This could change here in like literally 5 to 10 minutes. But what could this be the early signs of as we're starting our day here? I'll give it another minute. We'll pop back. I want to see if anyone else has any guesses. The market pretty flat here in the open. Let's check out our IV on 0-day contracts right now. Get an idea of what we're looking like if they load. There we go. We're like on the nose here for IV. So implied volatility, or in general, we're at 24%. So we're in the 24 percentile, meaning volatility 76% of the time is greater than it is today. So that typically shows that trends today should be established and held, barring a news event to increase volatility or anything like that. With that being said, price action is very tight so far. This is why I say wait out Monday mornings, because there's a lot of news to digest a lot of the time. And we're not really... I mean, what is this range actually? Let's see, 58. What's that, 70 cent range, something like that? 5, 6, 7, 8. Yeah, 80 cent, 70 cent range in the first 8 minutes. Not great. Toby says low risk asset rotation. Yeah, Toby, pretty right. I'm just going to touch up a little bit because you're not necessarily wrong, but you're pretty right. So when we see this, this is your warning sign that there could be potential movement into defensiveness. That's what Toby said, low risk asset rotation. Remember, your XOK is your growth, big tech, growth, AI, etc. Now, again, this could change, right? We're looking like we're starting to get a little bump here in the XOK, so we could actually see this reverse. But as it was sitting at the open, when we see tech going up and we see our defensive sectors, so that's your utilities, your energy, and your consumer staples, which are now, we're starting to see the trend reverse in real time. When you see these shift green and you see XOK shift red, that could be a risk off movement for the market, where we're taking money out of the higher risk investments, higher growth investments, and putting it into safer things. Utilities don't go out of business. Consumer staples don't go out of business. People need energy to live, right? These are the things. This is your safer quadrants of the market. So if the market gets spooked, meaning typically higher volatility, red XLK, and green movement, so we're seeing flow into XLU, XLE, and XLP, that could be indicative of defensive posturing in the market, which isn't necessarily bearish, but it is cautionary, I should say. So it's more risk off. Remember on this program, we talk about risk on versus risk off. Sometimes things aren't necessarily bullish or bearish, they're risk on or they're risk off. That's a big difference. You got to make sure you have that understood, because you can be a risk on bear, risk off bear, risk on bull, or risk off bull. Kind of depends. You can still lean one way or the other. Right now, for me personally, as we're looking at the market, I'm risk off really in general right now, especially how and where we're sitting on the SPY. But I'm willing to shift gears as we go, because as I explained to you before the market opened, there's a bull case and a bear case kind of in both directions right now. And especially with... Wow, Peloton's taken off. I'm going to cut myself off here in a second. I just got an alert. Especially with how the SPY is sitting right now, you want to be careful. Now, I'm going to pop over to Peloton. Oh, what a beaut. Oh, what a beaut, mate. I have $7 October calls for this, which I should probably trim some out that I alerted in the Discord. So, hold on, guys. Let me... What a beaut. Soundhound is also pushing for those of you that have interest in Soundhound. Oh, what a 105% gain. Wait, no. I gotta calculate that. That's a little off because I added some. Let's see. Let's see. Just checking on my phone. I hate looking at things on my phone because sometimes it's just like hard to read. Not hard to read, but hard to figure out what I'm actually sitting at. All right, I'm going to trim some of these out for those of you that are in our community. That's a 105% gain on a swing position on Peloton. Bellissimo. Hey, Dad, if you're watching, that one's for you. Alrighty. Okay, 176. Sorry, guys, give me 1 second here. Multitasking. And this is the kind of thing I want to talk about with our Big Money Monday. I want to highlight these longer-term swing opportunities. For context, I alerted this swing in our community on 6/17. They're October swings. It's pretty bullish on Peloton as a whole. And now they worked out. It took till August. And I did trim some already, to be clear, but this is basically the move I was looking for. I was waiting to hit 850, essentially. Look at that. Beautiful. Broke the 200 MA, moved higher. Beautiful move. Looking for 883 and 954 next if we get there, which would be nice. These are like stretch targets for options. Equity. I'm also long Peloton and equity. If 1093 breaks, this could have a solid push. And these are the kind of opportunities I want to put on your radar for Big Money Monday, which we'll do in maybe in a few minutes here. If the market ends up being boring, we'll just roll into it, because right now this is looking boring. Let's see, this is looking a little more exciting. How's the IWM? All right, we'll give it a few minutes. We'll see. I don't believe, because I know we have Trump talking at 10, but that's mostly about crime. Oh, they just updated the name of the presser. It's now Trump presser on crime and homelessness. So they added the homelessness portion to the presser. If there's any stocks involving homelessness, I guess keep an eye on that. Home builders, maybe? I don't think. But maybe keep an eye on home builders, materials, maybe, unless maybe FEMA's going to build houses. I don't know. We'll see. We will see. All right, we'll take a zoom around one more time. We'll see how things look, and if not, we'll roll into our Big Money Monday. I've got a few names I want to highlight with you guys. Here's a little sneak peek right here. Baba Tilray 10B, Piton, which we just talked about, SEMR, and Kron. So these are some of these. I've got a few other names, and we might even do some live together, so I thought it'd be kind of fun. If you have names in the chat that you're interested in or you want me to kind of like look at as well, feel free to drop them in the chat. People in our community do this all the time. Shout out Marcel if you're watching, because he loves to drop me random tickers, and he's like, hey, man. The other day it was hey, can you take a look at this company? It was a diaper company. I was like, yeah, man, and we looked at it together. And sometimes you guys bring me some great stuff, and it might be a great trade. And other times it's a diaper company, which isn't bad, but, poop. Literally poop. So if you have names you want to drop in the chat, feel free to drop those, and we can take a peek here in a little bit. We're going to keep an eye on the market here just for a moment. We're sitting around this LOI here at 637.58. You could take a shot here on a short if you really wanted to. It's going to be scalpy, though. I personally wouldn't. The risk reward on this open, looking at the 1, looking at the 5 minute, and looking at our pre-market price action on a 0 DT especially is not great, to be honest with you guys. It more than likely is going to be a very tight range on the SPY today. So maybe if you're trading like futures, you can take advantage of some of these like quicker scalps. Otherwise, I'd be very careful on options. Just make sure if you do purchase, so buy to open options, you want to keep an eye on your IV. If this IV is south of like 16 and you're at the money, if you do buy 0 DTE options, you want to be south of, and again, at the money, you want to be south of like 15 for like decent risk to reward, at least in terms of IV, because if you're buying to open, you want that IV to move in your direction, not against you. And because price action's so tight today, you want to put as many things in your favor as you can if you do decide to still trade a 0-day option. Toby says Marcel dumpster diving at the daycare center. I'll tag him. It's funny. That's funny. All right, we'll take one more look around and then we'll roll into our big money Monday. Guys, do me a favor if you're watching right now. We've got just a little over 120 viewers across every social media that I'm on right now. Do me a favor wherever you are. If you haven't already, I asked you twice a stream, so this will be the second time. I will not ask you again. Do me a favor, interact with the stream wherever you are. If you're on YouTube, drop me a quick like. I appreciate it. Quick comment, say hello in the chat. Some of you are. Hi. If you're over on X, follow me, subscribe, all that cool jazz. Wherever you are, Twitch, Kick, Instagram, whatever. Do any little bit of interaction with the stream. I know it's annoying. I know I hate when I'm watching something and they ask for this kind of interaction, but it does a lot. It helps me out here on the channel. I'm a very small fish in a very big pond, and any of your help, if you appreciate the content here, it goes a long way for me. It's your thank you. To me, that's all I want. Just drop a little interaction. The algorithm loves it. And if you haven't already, pop over to YouTube, drop a subscription. Once we hit 500 subscribers, this will be a daily show, and I don't have to say that little line every single time I do a plug anymore. So if you don't want to hear me say that anymore, go over to YouTube and subscribe. Tell your friends, tell your dog, tell your cat. Go over, make a YouTube account, and subscribe. All right. Like I said, we'll do one more look around the entire market, then we'll roll into our Big Money Monday here. So SPY sitting around this LOI. Qs, where are we in relation on the daily? Oh, we just made a new all-time high, actually, on the Qs. So today's high of the day is a new all-time high on the Qs. That's good to know. We did break that daily SAR there on Friday as well, so keep an eye on the Qs. IWM is sitting so tight here. You're actually building, that POC has now moved, actually, to basically where we're sitting. POC is 221.10, so we're about 16 cents higher than the POC on the daily, and that's including price action going all the way back about 4 months or so. I wonder how far back we can go on this. Ooh. This is a busy range. I know you got a lot going on my screen here. You watch this green dotted line. I'm trying to include as much price action. Let's see. So if we go here, there we go. Pretty close. 2025, about 5 months of price action. This is still basically where we're sitting, 220.24, where the most volume is traded. So a very strong pivot point just from a volume perspective here on the IWM. You can see, let's get rid of these doodles. This is our volume profile on the side. So this shows volume by price. Down here is volume by time. So big difference. So volume by price, you can see here, it's a big block of buys and sells here. A lot of volume, a lot of trading here. Whenever you see this area, support, resistance, whatever you want to call it, it's an area of liquidity. It's where people are long, where people are short, getting out of this area, whether up or down, and this is called a volume profile gap. See this gap here, where the bars are smaller? People have to close out the positions, reevaluate, whatever. You want to keep an eye on when you get out of this range either which way. Now, the top of this range is right around that tattoo level of 223.32. And on the bottom here, or at least going into this range, around that high, hold on, let me turn my doodles back on. The GP there, or the top of the GP, at 219.34. So very key technical area between these two levels. We got about $4 of wiggle room on the IWM, so really interesting to see. And firing down right now. Qs are flat, so I wouldn't touch the market today unless after Trump speaks, maybe he says something that gives us more directionality in the market. If I'm a betting man, and I'm not trying to rain on parades here, I think we're going to lean bearish on the day. And what I'm trying to say is it's a hard call right now and more than likely neutral, so we're more than likely just going to ping pong around with not a lot of range unless Trump says something otherwise. But how this is sitting, unless there's a big tech name, Nvidia's moving, bearish Meta, Microsoft it hasn't been great. Google needs to cool after that break. Apple realistically needs to cool in this range a bit, so you're not going to see a lot of bullishness out of Apple. You shouldn't see a lot of bullishness. Tesla's been holding up the ship pretty good. Amazon's flat-ish. I would lean bearish on the day, but again, when I say lean bearish, I'm risk off. So I'd be a risk off bear, meaning be very careful when I pick and choose when I'm going to take a position. But if I had to, it would be bearish, at least on the market, right? Individual stocks, completely different story. Speaking of which, Oh man, that Piton exit, pretty solid. Look at that. I had that LOI 850. We went 851. Not too bad. If I give you guys the lines and doodles to put on your chart, they're pretty good. I'm just saying. Now, let's get into our Big Money Monday. First name I want to highlight to you guys is Baba. So give me 1 second. Oops, that is not what I wanted to open. So a lot of these names I haven't necessarily... this is just one name I did a little bit of a dive in. But a lot of these names I haven't necessarily done a deeper dive in unless I'm already long for like fundamental reasons. So keep that in the back of your head. I'm looking mostly at technicals for the opportunities here. All right, so this is Baba and why I think Baba is a unique long position potentially for swing or equity investors. Now, sitting where Baba is really sitting right now, it's on this key or around this key LOI of 120.63. Now, you also have this downtrend established from, what is this, March? Continuing down also as we swept the lower LOIs down here and the 200 MA, we bounced up and you've been making not necessarily lower highs because you made another lower low here, but we've been respecting the 200 MA as it's been kind of finding its balance here, right? Big move up, came down. A little bit lower, a little bit lower. This was the exception to the rule, backtesting the 200 MA. And now we're sitting here where we're kind of making, depending on how you look at it, inverse head and shoulders, little baby cup and handle, whatever shapes you like. Again, I'm not a big shape guy, but you're respecting and you're underneath this downtrend trend line, but you're cooking up here like you could have a pretty nasty move here across multiple time frames. And I say nasty to the upside, so good nasty, not bad nasty. As this is sitting right now, it looks like you're consolidating before a potential breakout on the daily. You have decent RSI sitting at 53.82, so it's right in my sweet spot of what I look for bullish momentum. Your MACD on the daily is a little finicky, but it makes sense because we're respecting, again, this downtrend here. Now let's zoom out a little bit and look at the weekly. And look how this is setting up here on the weekly. You're respecting your 50 MA as we came back down, and you're, again, getting tighter and tighter on your price action here. Again, looking like on the weekly, if you want to have a deformed cup and handle, I know some of you like shapes, you got that deformed cup and handle there. I don't like shapes, but you do have that kind of look here in terms of price action. You broke the weekly red SAR here, and you're starting, again, respecting your short-term EMAs, your 8 EMA, your 13 EMA, your 21 EMA on the weekly. MACD starting to curl over, bullish RSI at 54. Looking at the monthly, and we'll get rid of my doodles here, you can see a little bit clearer. Big old bull, built a base, broke to the upside, cooling off, and that's basically, and I keep saying cup and handle because the essential point of a cup and handle, sell off, building a base, coming back, so having a false breakout, so to speak, this candle here on the month, breakout, coming back down and back testing, especially even your 8 EMA on the monthly, respecting your shorter term EMAs and MAs, bouncing and then going. And that's what I look like and what we're seeing, what we could see here on Baba here on the daily, weekly, and monthly. So this is a swing opportunity I'm not long on yet, but I'm very interested. Now, from a tech, we just talked about technicals and the opportunity here. Looking at the risk, yes, you do have this gap to the downside here. If you're structuring your trade carefully, whether it's equity or longer term, because again, I'm speaking in terms of longer term. I just highlighted a trade on Peloton I did that I alerted back, what was it, 2-3 months ago, and it's October contracts. So I bought 6 months of time. So for this trade to work out, I'm looking longer than 6 months. It could happen tomorrow, but I need to buy enough time to give me enough of an edge here. So whether you like equity, whether you like doing a spread, or just directional calls, whatever your game is, make sure you're hedging time as well, because this could kind of fart around, reject for a bit, but it looks really solid. I will also put the caveat that I hate Chinese companies. I hate them, I hate them, I hate them, I hate them. But the exception to the rule is, if there was one, Baba, massive company, massive infrastructure. If you like that exposure, this is an interesting name to keep on watch. Now, this also could be a victim of tariff and Chinese tariff news, whatever, especially with how many products they produce and how large their footprint is. However, I love the risk to reward here if patient. This is a company where it's in kind of a sweet spot. And again, we zoom out here on the month. That monthly all-time POC is a lot lower. It's at 83. But if you're just comparing that to where we are right now, you're only at like a $30, $40 premium, whereas all-time highs are sitting up here at 303. Currently sized right now at a $285 billion company. Wouldn't shock me to see this company either double or triple in market cap if you're patient. So breaking all-time highs at some point wouldn't necessarily be shocking to me, especially with how this is setting up here. I believe we're due for a strong markup on BABA to break all-time highs. If I'm a betting man, that happens prior to 2027. So that's my analysis on BABA and what we're looking at here for the medium to long term. We looked at some of the risks. Again, technically speaking, you could have this gap fill come down here and backtest that 200 MA once again. But at that point, if that does happen on the daily, you can keep a super tight stop here. So again, depending on how you structure the trade, I think you have a fantastic opportunity on BABA as it sits right now. What do you guys think about BABA? Do you like it? Do you hate it? It's interesting to say the least. I think the way it's sitting right now could offer a really solid move, especially if you break this trend line and especially if you get over this localized high. I think you got a firecracker on your hand. This one's very gappy too. When it moves, it moves. The only thing I don't like Chinese companies because they could be finicky with their accounting sketch. I mean, it's a big thing. I really don't like. You saw Lunking Coffee or whatever it was, and there's a few other Chinese companies where they can just essentially lie. So that is a huge risk in itself. But from a technical standpoint, the way this is set up, I think offers a unique opportunity here for some exposure to one of the bigger names in the stock market that is not a United States-based company. I mean, the only other Chinese name I think I'd ever personally consider would probably be Tencent. Again, because of its massive size, I have to assume that they're not going to cook their books at that size. But hey, anything's possible. Before we keep going, let's pop back to the market here. Just make sure, yep, missing nothing. Q's just made a new all-time high, but not with a lot of fervorance is the word I want to use. And IWM's pretty flat. Volatility flat. All right, we're not missing anything, I promise you guys. Now, here's Tilray. Tilray's an interesting one. So I already gave you guys my spiel on Kronos Group. I think Kronos Group gives you a better risk to reward. So if you do want marijuana exposure in your portfolio, Kronos Group's the one. My opinion. If I was to put them in order. Kronos Group, Tilray, and Aurora Cannabis, which I don't have on the list, but we can look at that too. Those are like my top three. But I like Kronos Group because I made again, multitude of reasons. They don't have debt. They have good distribution. Tilray's different because also I think they dilute the hell out of their shareholders. What are we looking at in market cap? Let me make sure. Okay, this. They are the same size, so they're roughly the same size market cap. Tilray I don't like comparatively because I don't think they're as... How do I say this? Tilray will probably get a larger percent gain because it's more memey than Kronos Group. More people know Tilray, especially from the, what did it go to, $300, right? Zoom out here. Yeah, it went literally to $300 at its peak. So a lot of people are familiar with this name, and that does a lot, honestly. If you've never heard of a company, why would you trade it, right? So I don't love Tilray, but I did want to highlight it as a proxy marijuana trade. So if you're someone who wants to day trade or short swing trade, Tilray could give you interesting exposure, especially with like $1 calls. Like, I know it sounds stupid, but even on the weekly here, for whatever reason, if Tilray can move up, I mean, the weekly contracts are like 2-3 cents. Pretty risky, don't get me wrong. But if we move out here, let's go to, let's see, September. You can take a cheap stab for 8 cents that it's going to gain at least, what is that, 30 cents between now and then. That's a big gain, right? I know it doesn't sound like a lot, but that's a pretty big gain on Tilray. And it's got to break this 200 MA before you get too excited. But I wanted to put Tilray on here because I do want to focus Big Money Mondays mainly being more swing or investment ideas. This could be your vehicle for day trading is what I'm getting at. I would personally wait to see if it breaks over 1 because that way you're at least playing with contracts that are closer to the money because this is going to be a higher IV trade. But if you are someone who has a smaller portfolio and or even a larger portfolio, you can de-risk yourself quite a bit by using some of your time to your advantage here. And yes, your percentage gains may not be as high, but these are cheap contracts. Like $1 March contracts are 20 cents. So you could even day trade these. These are up 50% from the close. So you could even day trade these if you really wanted to without running the risk of trading for pennies, right? Obviously, keep an eye on your Greeks, etc. So we'll get rid of Tilray. The other company I like, I forgot to say. So if you like wheat exposure, Canopy. This is your you might have heard of this one. This is like the big one, I guess, in Canada, if you want to say comparatively. Still under IPO price. Again, I prefer Kronos Group, and I'm staying long Kronos Group because if you compare side by side all your other weed names with Kronos Group, how Kronos Group is sitting and how their books are sitting and their previous partnerships, there's a better opportunity in my opinion. But this is another case of recognizable name, at least in my opinion. And you've built a little bit more of a base. So technically sitting, it's a little bit less aggressive than Tilray. Again, Tilray is very memey. But Canopy is also another one to consider if you want a different weed name in your basket here. If you did want to add them, they just had earnings. If I remember correctly, they weren't awful. And I'll be honest, I haven't checked up on this name in a little while. So I don't know what their earnings were. I just skimmed it the other day. Reports strong cannabis revenue growth. Okay, so they're probably good. So maybe keep this one on watch too. Toby says, I have Baba also on my list. Would like to have another test of the 200 MA. Yeah, so that's what kind of I was alluding to there. That definitely could happen on Baba. That would also fill the gap. So that would clear up a lot of questionability. Because you also have a gap within the gap within a gap. So you have a gap here technically unfilled, and then another gap here. So you have 3 gaps in the same area that are unfilled here. But gaps don't have to fill right away. And that's why I said, I mean, look at these candles. The price action is very gappy in general. It moves overnight very hard, obviously. It's a Chinese name. So it could move lower. That's why I said structure your trade smartly. The way I'm looking at Bob and the way that my head's working, I'm thinking of starting to dip my toes in here because it could just take off where I have maybe a half size on. And then if we come down and tap the 200 MA, I can put on my other half and then put a stop somewhere down here at the localized low. That's kind of how my brain's working on that. So that way I have exposure, more than likely will mark up in my opinion. I think the odds are favoring it more than it's against it. However, actually I think I saw this on the docket. Let me double check. I think, yeah, the US-China tariff deadline I guess is tentatively tomorrow. I don't know how true that is. I haven't, the stuff changes every day, so I'm not gonna lie to you guys. I don't know how true that is, but it is on my news aggregator that the China U.S. tariff deadline's tomorrow, or maybe it was originally tomorrow, whatever. So something like that could obviously give it a hard push either way, especially the industry in which Baba operates. They sell a lot of cheap crap, right? Same thing with Pinduoduo. All right, here's another one. So this one's a very unique opportunity in 10B. I think they're SaaS. What are they? IT? Yeah. So I don't think this is on anyone's radar. It's a $3 billion company. This is a very unique opportunity on a company I don't think a lot of people have heard of. It's called Tenable Holdings. And establishing a position here, so be very clear, I'm already long at like 29.08. Establishing a position here with a very, very, very tight stop can lead you to a decent gain or decent money-making potential here in the mid to near term. So risking essentially a stop at 28.65, which is my personal position. I'm long at 29.08, risking a 28.65 stop on equity. I'm only risking, as you can see on my screen, a 43-cent drawdown or a 1.5% loss. And if we hit my 4th price target, which is all the way up here, that gives me a 15-to-1 risk to return ratio. Pretty solid. Looking at this company on the weekly and on the monthly, you're basically at the 52-week low. You're at a low that it hasn't been at since COVID. You're at the COVID low. It back tested it here in 2022, and that low is 28.80. So if you wanted to be a little bit more, what's the word, conservative? Actually, no, my stop's at 28.65, so I'm under that. So I put my stop personally, in case it gets swept, underneath this 5-year low, which is even pre-COVID, at 28.80. Understanding that, from a technical standpoint, it is catching a knife. It's starting to try to turn it around here, but you are catching a knife, to be abundantly clear. It's not a technically sound trade, right? It's not fantastic, but when you look at even the weekly doesn't look great. It doesn't look overtly bullish at all. And even the monthly, it's been bearish, but you're falling and you've got a lot of high volume here. So there's a lot of movement with money here in general. This is a probably a very counter trend trade that I've taken here on Tenable, and I like it a lot, mainly because of the risk, right? So we like to highlight low risk, high reward trades. This is one of those unique opportunities where you're sitting at, again, a 5-year low, which is something that's going to be on every algorithm's radar, even the 52-week low, whatever. That low is going to be so important, where computers are going to buy, etc., where you could take a pretty safe stab with some money here, even if you know nothing about the company. Nothing at all. Just from a technical standpoint, risking, again, a drawdown of 1, maybe 2%, depending on your entry here, and have a pretty okay return, even if you get up here to my third price target. And these are my price targets: 3103, 3237, 3269, and then near term. So these are closer term price targets. So I'm saying sub 6 months, 3569. Gives you a 22% return on equity here. Now, I'd be careful on options. If we look at the options chain in general, you don't really have a lot of open interest. So this is we're in OPEX week right now, and you do have some sitting here at 34 and 36. But in general, let's look at next month's options chain. It's pretty dry, as you can see here on the call and the put side. So I would be very cautious with options on this name, probably because you're going to have a really hard time getting in and out. There's low liquidity. But with equity on Tenable, I think you have a very solid risk to reward trade here, where there's lower risk and higher reward. And that's the kind of trades you want to keep on your radar. Now, again, to be abundantly clear, this is catching a knife. It is risky at a hard fall off earnings, but you want to buy when people are scared. People have been scared, and now you're sitting down here where you're at, again, your 52-week low, your 5-week low, and you're building wicks. That's the other important thing here. You have a wick here, a wick here, a wick here, and a wick on today's daily candle. People are sweeping up. People are buying, at least in my opinion, what it looks like. People are buying, and this could be the early start here of a reversal. Now, it could come up to maybe like 29, just shy of 30, and just get shot to shit and die. Could happen, but that's why you have a stop on, and that's why you're playing equity, right? So this is a specific equity trade I like quite a bit for the risk to reward. Again, 15 to 1 risk to reward if we hit my price target here is phenomenal. Now, this may not happen overnight, but for the time frame that I'm looking at, again, around 6 months at the longest, this could be a stock that you want to keep on your radar. And again, if it overperforms, so it breaks out here, and by then the 200 MA is probably going to be around or under my near-term price target here. But if that breaks with some volatility here, we're burnt out on the monthly. We're going to be more than likely burnt out on the weekly. You've got a big volume gap here to get up to 38.30, $40, and then you've got a gap to fill up here in the low 40s. So you're talking about $15 potentially to the upside here in a year or so, sitting at 30. So that's a 50% gain on equity if you're patient within a year, and you're only risking 1 or 2% downside. That is fantastic risk to reward if you're patient. So that's my quick little analysis on Tenable. Let me know what you guys think. What do we think about Tenable? My water bottle overflowed. Not that any of you care. And I talk so much on this program, I need to get like an IV directly inserted into my vocal cords. This is a unique trade, like I said, from a risk reward standpoint. I run this program in our community exclusive trading called the Seed to Tree program, and this is one I alerted recently. And the Seed to Tree program is like a small account challenge, but done correctly. And this is one of those kinds of setups you want to look for, where you're at a low. You can even set up a screener for this, where you're at a drastic low, bad earnings or whatever, the market hates it, and if there's something there, again, even from a technical standpoint, where you can take a pretty solid risk here of only risking a few pennies, it's worth the risk, in my opinion. Because if you're patient, it will work out. And if you're not, like per share, if this fails, I lose 43 cents. I'm sure you've lost 43 cents in a hole of your pocket before. Like, it's a no-brainer. And I risk to gain at least $6 per share, at least near term right here, 661 from my entry. So it's worth it to me. I think you should keep it on your radar. Negum says worth the risk. As you obviously know, I agree. Alrighty, let's see. So we talked about Baba, we talked about Tenable. I highlighted Piton. I'll just highlight it again. You are a little chasey here. We broke the 200 MA. We pushed a little higher here. You are chasey. If you do like this name, I'd wait for the back test of the 0.382 retracement. I am long equity. I am also long calls. Calls I'm trimmed out of pretty decently, and I'm way in the money. I have $7 calls. Way in the money, relatively speaking. So I've trimmed those out, so I'm not being too greedy here on Peloton in general. This is a hard move off earnings. They actually reported pretty decent earnings, cost-cutting measures, etc. They're looking to sell old equipment or get into the resale market, I should say. So this is a solid move here. 883 is probably my last take profit point for calls, unless I'm going to just keep some for fun if momentum's high. But more than likely, you're probably going to backtest this 784 area. So that's your 0.382 retracement. It's also where you saw a bit of a rejection here on the earnings candle, and then a little bit of a rejection here on Friday's candle. So tapping this LOI here at 850 and getting a bit of a back trace before bouncing and goes, that also allows your 8 EMA to catch up before potentially getting another leg here. And you're breaking out of a decently solid base as well. So this is one you want to keep an eye on, especially if you're like a day trader. Wait, I would say, for if you're looking for a short swing, and short meaning time, not bearish, wait for that 784. I think it's your sweet spot where you have pretty balanced risk. Then look for a long, in my opinion. But this is one you want to keep on your radar. Again, it's moved pretty quickly, pretty recently. It's had us a lot of short interest, so you could speculate a lot of the short interest is now coming out. People are closing their shorts right now as it pushes. De-risking, right? Wouldn't shock me. So let it do its thing. I wouldn't chase unless you're day trading it already, and kind of go from there. In fact, I'll put my money where my mouth is. I trimmed a good amount. I'm debating if I want to trim a few more. Yeah, what the hell. I'll trim a few more as I'm talking about it. Why not? There we go. Wonderful. I'm basically going to runners on it, so I don't have to worry about it. But I set a few price targets and let it kind of do its thing. If they hit, I'll get auto-filled, and if they don't, whatever. Those are the best kinds of trades. Again, I got those for 87 cents. They're now selling around 188. And if you want more of that kind of content, you can join our Discord over exclusive training. Links in the bio. Toby says, you gonna execute some options on Piton swings. You mean, am I gonna open new ones? I was long as of 6/17 on the 7 calls for October at 87 cents, which are now trading around 188. Am I gonna open new ones? I would consider opening new ones depending on if we back test again that 784 area. This is up too high too quickly for me, where I want to sell into high IV. I don't want to buy now. You had two over, what are they, 10% days or whatever in the last 2 days. IV's probably juiced on this without me even looking. Let's see. Bullshit. Sorry. IV percentile is no way it's 0. No way it's 0. Because if that was true, I'd be loading the boat. That's gotta be wrong. I'll come back tomorrow. This means that 0.38% of the time IV was lower. Okay. I doubt IV percentile is that low. That is insane. If that was the case, you should be buying to open a boatload of Peloton calls, because the IV on this one can skyrocket. I am not going to do that because I don't believe that to be accurate. I believe that to be some sort of glitch. But yeah, I would consider... Toby said no. What's it called again? On the expiration, take the shares at $7. I don't know what you're saying, Toby. Can you reiterate? Can I execute some options on Peloton swings? No. What's it called again? On expiration, take the getting assigned. That's what you're saying. So you're saying, all right, so what Toby's asking is, am I going to take an assignment on the shares? So when you buy a call option, remember, because we trade call options, we trade put options. When you buy a call option, it gives you the right, but not the obligation to purchase 100 shares at the call price. So in this case, I spent spent $87 per call, right? It's a $7 strike. So that means my break even is $7.87. I can do what Toby's asking is I can pay $700 per call to purchase shares of Peloton for $7 a share. My break even though, because you have to include the price I paid for the call, would be $7.87. So he's asking, would I get some shares? Correct me if I'm wrong, Toby. Would I take the assignment? Yeah, no, he's saying, yeah, whoops. It depends. So for me personally, I already had shares of Peloton, and I'm already long shares of Peloton, and I like my sizing. So for me personally, I wouldn't take the assignment, just because I already have exposure via equity, and I'm okay with it. If I didn't have exposure, it really depends, because what you could do. All right, so here's what I would personally do if I wanted to potentially take the assignment on a $7 call on Peloton. And I just happen to also have October $7 calls on Peloton that I bought, just happened to buy them around 87 cents, right? All theoretical. I would take profit here. I would wait for it to backtest, because you're going to get some IV crush on those contracts, and get back in around that 784 area. And at that point, I'm buying deep in the money. Well, not deep. I'm buying in the money by one strike, or two strikes technically. It'll be a lower cost basis, so I can realize some of those gains in the middle while I wait. And then I can balance how much I want to theoretically get assigned, or how much I want to take profit on, where it goes, etc. So that would give me a more balanced trade where I can realize the gain I already have, and then roll those gains theoretically into, I mean, it may not be cheaper, but depending on the time it takes to get there, what IV looks like, it's either going to be cheaper, the same price, maybe a little bit more expensive, roughly the same, but it'll give you the opportunity to reassess, because what could also happen is you could come back down and tap the 200 MA, which could happen. I have the 7061 LOI, so that could get swept as well. But if I wanted to take the assignment around 7, like I said, I'd take profit here at 850, and I would look to reestablish a new long around the 761-ish area, 784. And if I if I wanted to take an assignment, I would actually cut my time down, because then I'm just paying for time premium I don't really need theoretically if I'm like willing to buy at 7. So at that point, and this is just looking at contracts we have now. Let's say I go September 7s, right? I guess September's not much cheaper. I was gonna say September 7s right now are, we'll use the bid price 158, while your October 7s are 180, right? So I mean, I'm saving a little bit of money, but if I really was planning short term and I'm okay with an assignment, I could go 2 weeks out and buy the 7s. But at this point, you're not really saving much money, to be honest with you. I'm just looking at these prices. So I would just buy more time in that case. As I'm looking live, again, this can all change. That's why I said I don't believe this IV percentile to be correct. So your question's a very good question. But it's also a very nuanced question. It really, really depends on what we see. So it's hard to say. But for me personally, I wouldn't take the assignment because I already own shares. So I don't want necessarily more shares. Hopefully that makes sense. All right. Another Big Money Monday name. I got to add these to a new watch list, and I'm going to call it Big Money Monday, and we'll follow up. Like that. This one I almost got stopped out of. This is SEMR. Okay. So another Big Money Monday idea we have here is SEMR, SEMrush Holdings. This is a SaaS company that's offering a very interesting setup. Now, I am, full transparency, I'm long around this 720-ish area right now with a very, very, very tight stop down here at 705. Very tight stop. And why is that? Well, before we go anywhere, let's just zoom all the way out. The all-time low for this company is $7.08. We're trading at 723. Look at all these wicks. Wick. This is the monthly candles, right? Wick. Every time it gets down here, with the exception of this current candle so far, and the month isn't over, it has left a wick. Every single time it is not broken lower. These lows are 719, 716, 721, 725, 736. Every single time it has been bit up. Technically speaking, I said this within a prior video about Tenable. This is a knife catch. This is not clean technically at all. This looks like trash. It looks bearish here on the daily. They reported earnings. Bad reaction off of earnings. Broke this downtrend to the downside. Weekly, big old red candle. Broke the downtrend to the downside. on higher volume. Pretty bearish. Monthly. Bearish MACD falling on higher volume. It has actually been hated on for about 6 months. This 6 months ago was at $18. It was over 100% premium of its current price just 7 months ago. And that's a little bit of the risk you take when you're investing in it's not necessarily a small cap, it's a $1 billion company down here at this evaluation, so up here at $2 billion. But again, what I like about this and what could be an interesting opportunity here is because you're risking all-time lows here. And these are the kind of opportunities I want to highlight because these aren't necessarily bad companies, but they're companies that are vulnerable. And you want to be looking out for companies that are really vulnerable because they can offer you very tight risk to reward. And in this scenario, again, with my entry being around 7.20 cents, something like that, I'm risking a 23-cent drawdown, and I put my stop under the all-time low. So you want to be careful. You want to put it necessarily at the all-time low or just like a penny or two. You want to go a few cents under. So me personally, I went at 7.05, and maybe I actually, now I'm thinking about it in real time, maybe I move it down to like 6.95 because maybe $7 as a whole number gets swept. Maybe 6.99 gets swept, right? So I don't necessarily want to get stopped out on that and then it goes whoop to the upside. But even if, right, I'm risking 23 cents drawdown here just to revert to my first price target of 781. Just the first price target before we hit any of these other ones I've got mapped out here. The very first price target, which mind you, price was at 3 days ago, would give me a 2.3 to 1 risk to return or risk to reward scenario. And again, if we manage to get all the way up here, roughly, where we were just 7 short months ago, I'm over 100% on equity on this name. This is a name where, again, it's not without its risk, but the risk is very small comparatively to other names where you're buying into high momentum trades or something like that. This is a name that has gotten beaten down, that had a pretty decent technical break. It is bearish on the daily. It is bearish on the weekly. It is bearish on the monthly. It looks like a bear is going to try to push its head underwater here and break those all-time lows, and it may. It could happen, right? But risking 3% drawdown, 2% drawdown, a few cents here is well worth the risk if the bulls can step in, if the bulls defend that all-time low. You have a very attractive reversal trade here, and some of these names of equity that I like highlighting are these names that you could hold on and not worry about, right? This reverses out, it gets up to $11. The fluctuations aren't going to matter to you. You're going to be losing pennies or whatever every other day, but you can patiently wait and see it slowly reverse to the upside here if you're a long-term investor. Now, this is a SaaS company. Not everyone loves them, so make sure you do a little bit of your due diligence before diving into this name. But even from a technical basis, it's garbage, right? It's not good from a technical basis, but from a dollar and cents basis, this is a good risk to return opportunity here on SEMrush, simply due to the fact that if you establish a very, very, very tight stop, you're risking all-time lows. The price would never have been lower in the 4 years that this was on the stock market. So that's why I like SEMrush from a risk to return ratio perspective. So not necessarily from a technical basis by any means, which is how I typically trade. But when you're talking about dollars and cents, it makes a lot of sense to take a stab here, because I'm sure there's lots of other risk you guys have taken in the market. I know I have, where the risk is much higher and you don't have as much potential at a decent reward. And I think the potential in SEMrush here is very high if you're patient and if you have the appropriate stop on SEMrush. What do you guys think? What do you think about SEMrush? This is one that I've longed a few times and I've made money on, and I think I had one loss on SEMrush equity before. Risky, right? But similar to Tenable, you're sitting at a key, like something I learned a while ago is to be a bottom feeder. Like with the stock market, you want to find the crap and buy it when it sucks and no one likes it. I don't know if Exclusive is watching or X is watching, but he bought Hood. You guys know Hood, Robin Hood? And he made it public on his X. He bought it somewhere in here, right? Like $6, whatever, $5 or whatever it was, $6-7 or whatever. And it's at 116. Like, you got to buy when the market hates it, everyone's dogging on it, bad earnings, whatever. But the risk to return makes a lot of sense, especially if they're a strong brand. That's why I liked Bumble, for example. That's why I liked Match. Those are strong brands. Hood was a strong brand, and now it's trading at all-time highs. and it's a $100 billion company, right? So, not saying that SEMrush or Tenable are strong brands, so they don't have that going for them, but the risk to return here, the risk to reward, I should say, is very solid, because you're only risking a tiny drawdown, especially on equity. You can get stopped out and you're out, right? You don't risk to get drawn down even more. But it gives you potential for upside here, and that's what I really, really, really like on all these names. What do you guys think about Big Money Monday? Toby says Peloton could be good sell to open puts opportunity at that level. I agree. That's actually a solid way to look at it, Toby, because you could sell to open puts at 7, and that way you don't care if it sinks below because you're going to buy a position at 7 anyway. So that's another way to look at it. I like that. I like that more than buying calls and taking the assignment. That makes more sense. That's a better way to look at it. What do we think, guys? Did you like your first Big Money Monday? I'll be honest with you guys, I got a lot going on in the background right now, both with our community and in my personal life right now. We're moving a lot of things around, so I anticipate the next one to be a little bit more, what's the word I want to look for? Exciting, but these are some opportunities I think are really solid that I think would still be good considerations for you guys that I am bringing you. Gonna circle back around to the market right now, and as you can see, it was a great day to not touch the market, as I highlighted at the open. Even though the Qs are pushing a new all-time high, the range on the day so far on the Qs is $2, which not bad. Better than SPY. SPY's range has been actually, let's do this, make it easier. 637, about $1. So really tight range on SPY. IWM about $1, $1.20. Pretty slow day, volatility, just kind of chopping sideways. This is a day you more than likely want to stay away from the market. And when I say stay away from the market, I mean trading the indexes. I alluded to that very early on in the morning at like 9:37. You probably don't want to touch 0 days at all. I wouldn't. This is not conducive for profit making, either on the buy or the sell side. It really isn't, unless you're really top ticking or bottom ticking. It's not going to be a fun time. If you trade futures, that could be a good opportunity where you could scalp. But I really be hands off with 0 DTEs, unless, again, there's a key opportunity at a key price level that you love. By all means, do your thing. Neegum dropping a heart, and Toby saying, yeah, I like it. NVIDIA's at a new all-time high. Ooh. NVIDIA's 30 cents away from a new all-time high here. Current all-time high, 183.88. I do want to touch on what I said again. Next week is their earnings. I'm sorry, 2 weeks from now. 3 Wednesdays, but 2 weeks from now. The 27th is NVIDIA's earnings. I want to remind you guys 2 things. One, I am in the camp, and I've been in the camp, that I think NVIDIA would touch 200 before September. I think I said that a month or 2 ago, back when we were like over here, maybe 3 months ago, 3 months ago, whatever it is. After we broke 141, I was like, okay, we're probably hitting 200 before September. Now we're here. We're not there yet, but we're pretty damn close. I want to highlight and remind you, as we approach earnings, as NVIDIA continues to move up, the expectations for them to blow it out of the water are going to be that much higher. I still think they'll report fantastic earnings. I think their earnings are going to be fairly good. I think what they say will be good. I think they're going to beat all their expectations that they've set for themselves. However, will their expectations be, will their reports be as good as the market is essentially front-running them to be? If this continues to go, especially if we tap 200 before earnings, I would be very, 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 very careful as a bull into NVIDIA's earnings, because we already all know NVIDIA's a lofty evaluation. That's not an argument for anyone. We're all going to say it's a very high evaluation, but it's hard to put a price on the future. It's hard to put a price on AI as a whole going into the future. If we continue to tick up, though, into earnings, you're building in this expectation that's going to be fantastic, and what if it's not? What if it is still phenomenal? Amazing numbers. They beat on every metric, and it dumps 5 or 6%. 10%, because it's just not good enough. It's great, they beat their expectations, but it's just not sensational. It's not above amazing, right? It's just iffy. That is my big warning that I will tell you all, because I feel especially if we grind up. Now, this is a completely different conversation if we reject this area, which is a possibility. We could break it today. But if we build some level of resistance up here, we come back down, and like I said, sitting 170, 175, I feel a lot better. But we come back down before earnings. You can feel better as a bull going into earnings. You had some people take profit. It cooled a bit. Some people are shorting, whatever. You feel a little bit better. I'd feel even better if we backtested the 50 MA. That's a deep fall, right? That might be the earnings move. We'll see. I'd feel even better about being a bull into NVIDIA's earnings then because we're dropping the evaluation of it, obviously. So that would put the ball more in the bull's court. As it climbs up into earnings, though, it makes it more risky. So please, please be careful. I know almost everyone and their dog has NVIDIA exposure or some adjacent exposure. Just be very cautious if this does move into their earnings. Now, you got, like I said, what is that? 5 and 12 trading days to go before their earnings. A lot can happen in 12 trading days. So we will reassess, and as I do on the program, we'll talk about it some more as we go along here. But as it sits right now, again, I'm not bearish, I'm not bullish, I'm risk off. Actually, I would say I'm bullish. I've been bullish since 140, 136. But I would be risk off. So big difference. Remember we talked about risk on, risk off? Risk off bull. That's how I would define NVIDIA where it's currently sitting. We talked about Meta, Microsoft we talked about, Google should cool today, Apple should cool. Apple needs to cool for a day or two, honestly. Watch it to sustain south of 227.11 today. I'm not saying necessarily it needs to die, but we'll just watch it stay under that today. Tesla, I think we're going to break out this week. I mean, you already got a hard break. You're up almost 4% here. I think this technically, I'm not drawing lines here, but it looks like we'd have a break of that downtrend here on today's candle. So see if there's continuation there. I'm still bearish sub 360 on Tesla. If 360 does not break, this is going to go down eventually. Now, this is a really good sign, though, to be fair. You've built some level of a pennant here. You're starting to break to the upside. You broke the red daily SAR. This is a good sign for the bulls here, but you're not out of the woods. This is a good start, though. If the bulls are going to reverse this, this is the time where they have to step up in, like, essentially this week. On this candle, there needs to be follow-through. There needs to be volume. There needs to be a hard push. Now would be the time to strike on this weakness for the bears. This is the time, if you're a Tesla bull, you want to see them push through. If there's failure, and if there's a higher volume rejection this week, I may actually look at puts at that point. Because, I'm still bearish sub 360. All right, I shouldn't say puts. I should say a bear position. Let me phrase that differently. I will look at a bear position. Because if it stays sub 360, and especially on, look at these last 4 daily candles here. Pretty decent move here. If it can't sustain, especially through 145.72 and 152.78, these two levels up here, if it can't sustain through that with good volume, there's a high probability it's going to come back down, back in this range of at least 320. And if the bears strike then, this is getting drawn down. Cool. All right, guys. I think that was a pretty good show. I'll look at our sectors before I go. Or if you have any questions in the chat, drop them right now before I say c'est la vie. Oh, look. The roles reversed here. XLU, XLE, and XLP all flipped red. And tech flipped green. Interesting. The roles reversed. Yeah, so that's interesting. So today would qualify for sure as a risk-off day. It's interesting that we see our defensive sectors red with a green tech. The tech isn't really green by much. I'd be a risk-off bear today. I think I said that at open, but I would be a risk-off bear. I think the market will lean bearish today, but I would be risk-off, meaning I wouldn't be too fervently bearish. I wouldn't be aggressively trying to buy puts or short or anything like that. I just think the trend that we establish on the day is going to be a bear trend unless something material changes. I think NVIDIA should come down a bit. Meta's still bearish. Microsoft has been, they had a little pop here, but Microsoft has been grinding down on the weekly. Google needs to cool. Apple needs to cool. Really, it's up to Tesla. If Tesla can melt to the upside, it will give you some bullish confluence. And Amazon is going to float around here. So looking at just the Mag 7, remember we talked about this at open. Was it 35% of the stock market is the Mag 7, right? So the big players in the stock market are leaning bearish, you want to be a little cautious. And we do have green volatility, right? You're up at just shy of 16 here, 1579 on the VIX. VVIX has been decaying, so we're seeing VVIX come down, so it's saying volatility is going to become less volatile as the day goes on. Conversely, volatility is also condensed a little bit, but I would actually watch. So here's going to be your real strong sign that the market would actually move a little bit more aggressively bearish today is if you break the lows on SPY, you break basically your POC on the Qs, so around this like 575 area. You see VIX curl up and VVIX continue to grind down or stay sideways. That specific scenario will more than likely lead to a bear trend day. Still be risk off, but we would just trend slowly to the downside. I will remind you before I go, this week is an OPEX week, right? A lot of money's moving around. Every time we have an OPEX week, it tends to be a little, I shouldn't say every time. I got to watch my wording here. Frequently on OPEX weeks, the market tends to shop, right? It sometimes has a big move, right? Because it's a stock market, but it tends to, a lot during intraday price movement, it will chop. It might have a big swing up or down, but then it will revert to chopping. It's just a lot of points in the day, it will chop. So you want to be very careful this week, especially on the indexes if you do decide to trade the indexes, or if you're a futures trader, like I said, scalping is probably going to be your best bet versus a longer hold, especially when you're on margin like you are in futures. Anyway, guys, that's going to wrap it up for me today. I hope you enjoyed the show. If you haven't already, again, drop a quick interaction with the stream, a like, a share, a comment, wherever you are. We'll probably do another 1 or 2 this week. I haven't announced them just yet, so if you haven't already, go follow me on X. The link is, or not the link, but my name's over there, all the way at the end. It's at Atomcash. Go ahead and follow me on there. I'll put an announcement out later today. Or if you follow me or subscribed on YouTube, if you go back to hit the live section, it'll say upcoming, and I'll tell you when the next stream is. We'll do some later this week. We'll probably get that out later today. It just kind of depends on a few things that are completely out of my control. So I will try to do another 1 or 2 shows this week, but again, really depends on things that are completely outside of my control, which I won't know more about until later today. So with that being said, some say you'll need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Guys, I hope you have a great rest of your day. Trade smart, and remember, precision beats prediction every damn time. I'll see you soon.
The time has passed, and that's a wrap. You're on